Hello and welcome to BQ Prime. A very good afternoon to all the viewers. I am Hiral Daja and you're watching Stocks That Will Be in Focus. Clearly, you have a Kaynes, which is in focus, and this is mainly on the back of the Q4 numbers Q2 numbers, I beg your pardon, that have come in. Revenues have seen a growth of around 32%. Margins have seen a dip this time around on a Y-on-Y basis. However, the profitability has improved by 54%. Now, let's understand from the management as to what's worked, what's not worked, and what's the strategy going forward from here on. Joining us on the show today, we have Mr. Ramesh Kannan, MD at Kaynes Technology, as well as Mr. Jairam Sampath, Director and CFO at the company, joining in. Good afternoon and welcome to the show, gentlemen.
Good afternoon.
Good afternoon.
Always a pleasure to speak to you and have you on the show. Firstly, if you could help us understand, Ramesh, in terms of what has worked and what has not worked, and also have the numbers met your internal expectations?
Yes, for us, things have worked well. Our order books have improved a lot. Our EBITDA margin, which has come down, is as per plan, because we had taken up more development this quarter, because we have to take some products for production in the last quarter. So this quarter and next quarter, we have to take them on the trials and first lot, second lot. During this time, there will be margin losses. But having said that, we have also cautiously worked on it. That is why the difference is not much. As far as our sales is concerned, we are constantly booking a sale revenue of around 1.4 crores. And now this month we have touched 1.6 crores. So 160 crores. So sorry, 160 crores. So what I'm trying to tell is all this has worked for us very well. Exports, there I am seeing a little lull in the market, but it is getting caught up with other businesses in the development stage. So we are well posed to reach whatever guidance we have given in the year beginning for the year growth. So this is where we are.
Right. Overall, that's the overall picture of what the quarter is looking like. Jairam, coming to you, if you have to look at individual segments of the business, where is it that you are seeing stronger growth? Because clearly there has been a shift if we see the revenue mix. Automotive, the first half of the 24, we've seen the revenues decrease as compared to the contribution that we saw in FY23. Similarly, we've seen an uptick that has come in terms of where industrials are concerned. And you have railways, which is seeing some bit of an up move. So are these the dominant sectors which will drive growth for Kaynes Technologies, or how are you seeing that split move from here on?
No, absolutely, Hiral. I think your reading is correct. See, last 3 years, the automotive sector helped us to grow the revenues. And of course, our really, let's say, preferred sectors or sectors where we do perform well and we have solid salience are sectors like railway, signaling, and aerospace, defense, and industrial, and all that. And those sectors have now started looking up. So 30% overall basis, automotive is not bad. And we also know that automotive sectors are subject to some cyclical effects from the marketplace. So from that perspective, that's why we've been in the past also said that we have a diversified portfolio, and that has come into play now. And if you notice, at a PAT level, we've actually doubled our PAT. And for this year also, compared to last year, we will, in absolute terms, double our PAT. So the respective vertical-wise growths are well in line with our expectations. And obviously, industrial and EV sector, plus railway signaling, plus IT. IT, we are now getting from very large customer in India, some high-performance computing servers. So hopefully, going forward in the second half, I think it will be a good, exciting development from our side. And that's what Mr. Ramesh was saying, that we will probably definitely meet the overall guidance that we have given well.
Right. Now, if I'm just looking at the ODM segment, apparently, the revenue contribution has decreased. It was almost 9% in FY22 So what is the plan with regards to ODM in the future? And is there any possibility where the revenue contribution from ODM will again increase because it's what 3% now versus a 9% in FY22? How are you looking at it?
Yeah, no, it's actually a very insightful question. So ODM requires some development lead time. So we are putting together teams. And in fact, we did have a smaller team earlier. We have now onboarded 2 different teams. And an exclusive center is coming up in Bangalore, wherein we would be working on becoming a premier ODM player in certain markets. We'll come with more details later. So if you notice from last time, the box build revenues have come up. So that's one good, let's say, beneficial impact. And ODM will go up, but it takes time. Any product development cycles take time, and we do it in only a few sectors. We don't do in every sector the product development. And so right now it's a preparation time. It's nascent stage right now from compared to the ambitions that we have. And you can see a lot of actions in maybe last quarter of this year and next year too. We'll see some good ODM work from our side.
So how long do you think will it take for the company to get back to that 9 to 10% revenue contribution?
Yeah, so ODM and IT and IoT normally put together is 10% in the past, and currently also it's 10%. The boundaries between these 2 segments are a little gray. But we think that this 10% maybe next year will go to about 15% or so. I'm talking about FY25. And we are on, so there are segments like industrial and EV as well as IT, IoT and other segments wherein we have a significant amount of development going on. Telecom is also one area where we are not present right now, and you see some little ODM work from our company going forward in the future. So this may take anywhere between 2 to 4 quarters, for you to see it in action.
Right. When you talk about automotive as well, again, EV around 10 to 15% is the contribution that we've seen in FY23, I beg your pardon. Where does it stand now in terms of EV as a segment? And what's the plan going ahead? Because it is a high margin business as compared to IC. So if the contribution of EV is expected to improve, then automatically we see margins also improving.
Yes. So EV sector, we are improving the richness of our contribution in the EV sector. So earlier we were doing with a premier 4-wheeler manufacturer, EV 4-wheeler manufacturer. We have onboarded a premier top 2-wheeler manufacturer. We have also onboarded now, started working with charging infrastructure. And we also make components which are used in EV abroad. So in all, going forward, we can show some strong performance in this EV and industrial area, taking into account all different aspects of electric vehicle, not merely the vehicle, but charging infrastructure and components thereof. So obviously, EVs is the kind of, let's say, segment of the future as far as the future of transportation is concerned, especially in the urban transportation. And we are mindful to collaborate with top companies in this area so that whatever good benefits they get in the marketplace, we also get a, let's say, benefit, get benefited appropriately.
Right. Another question I have is with regards to OSAT, which is the outsourced semiconductor assembly and test plant. Now, the government is absolutely giving subsidies for it, but there are a lot of preconditions that the government has when you talk about the semiconductor schemes, right? So what is it that the company is planning to do with regards to the semiconductor space as a whole? Because clearly we have spoken about earlier as well with regards to the plant in Telangana. At what stage is it and what's the plan?
As far as state subsidies are concerned, we have already got the sanction. We have got the clearance for the project. At the center level, our project is under serious consideration. We have clarified most of the points, and we should be there in another couple of weeks or a month or so. As far as conditions are concerned, well, I never felt that it is all a condition, because when government is putting large money, Nothing wrong in asking us to do all those compliances. As a company, we will be putting only 35-40%. Rest is all going to come from the government. So we have agreed for all their conditions and we are complying with most of them.
Right. So with regards to the facility investment, if I'm not mistaken, you're looking at 2,800 odd crores, right?
Yes.
Is that going to be the investment that Kaynes will be making, or is that going to be divided between the government subsidy as well as
It
the
will be
contribution by
divided between
Kaynes?
the government subsidy and what Kaynes is going to bring. In my opinion, we will be on phase 1 bringing around 450 to 500. On phase 2, another 500 crores. And then the last phase, another 200 crores. So
Okay.
we are within our plan. If the government subsidies, everything comes in.
Right. So when you talk about this business as well, now, is the government subsidy coming in upfront or is it coming at various levels? And what is that trajectory and timeline expected to look like?
Some portion is coming upfront, some portion is coming at a staggered way. But I'm sure and certain our finance department has planned all these things in such a way that what we can recover from the government in discussion with them.
Got it. So when do you see revenues actually flowing in from this business? Because this is going to be something absolutely new. How is the business strategy planned for
It will be in the last quarter of next financial year where commercial production will start. Till then, lot of trials, quality validation, lot of the technical parameters has to be done. We should be ready for all customer visits, audits and all by first quarter of next financial year.
Right. And very lastly, if you have to look at business as a whole, taking the current run rate into consideration in terms of the top line, say around 1,500 to 1,600 odd crores, is that a revenue potential for FY24? And once the new plant, comes into being as well, is it a possibility where the revenues can then double to somewhere in that range of 3,500 crores?
Yeah, as far as this year is concerned, we still stick to our guidance earlier, 1,700 to 1,800 crores. Second half is going to be about 65% of the total business, and we have orders about 3,400 crores as on 30th of September. So that is kind of planned already, and it's a matter of just getting the material in and shipping out stuff and so on. As far as the current business is we seeing about 15% EBITDA plus, and anywhere between 9 and 10% PAT is what we expect in the current our EMS business. So when we onboard these two businesses, 2 years hence, obviously the first 2 years is investment phase. You may not be able to get too many sales done and not much of profits. But in the second year onwards, we expect, let's say, semicon business phase 1, we are talking about 1,500 crores of investment. So company share will be anywhere between 450 to 500 crores. So for this 500 crores, we'll get anywhere between 1,500 to 2,000 crores of sales. That is obviously to start in a small way at the end of next financial year. So let's say FY26 onwards, you can expect these kind of numbers to come in. Maybe it also takes a trajectory. You don't start with the top capacity utilization. So with this 450, 500 crores of phase 1 investment, we can maybe get about 1,500 to 2,000 crores of additional revenue. And the EBITDA and profit numbers are not going to be worse. They'll be certainly better. So this will be profit accretive business. And because the government has given subsidies, our asset turnovers, etc., also be fine because government is giving 70% subsidy. So from that perspective, it's not really different from our existing business. And obviously, it takes a lot of effort because we'll concurrently also starting phase 2 in Karnataka. So that is another activity, and then their PCB, etc. So yeah, a lot of work, but I think it will be exciting times ahead for next several quarters.
The EMS sector itself.
Yes.
Absolutely. The sector itself is something which is really buzzing. And the growth story absolutely seems to be intact because the kind of stock performance, if you see in the last 6 months, more than double is the kind of returns investors have made on a Kaynes technology itself. So I think the upward journey, it seems, is here to stay with the new businesses as well. Thank you, Ramesh. Thank you, Jairam, so much for joining us on the show. It's always a pleasure to speak to you.
Thank you.
Congratulations and good luck for the coming quarters as well, and speak to you soon
Thank you.
again.
Thank you so much, Hilalji. Thank you. See you later.
Always a pleasure. So that's the management of Kaynes Technology, clearly indicating the roadmap going ahead, the newer businesses that will start contributing as well, and the kind of revenue mix we should be looking at going forward. That's all that we have in this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BK Prime.